In September 2008, Wall Street didn't just crash, it froze. Banks stopped trusting each other, markets collapsed, and one name became the symbol of total failure: Lehman Brothers. For over 150 years, Lehman Brothers stood at the center of American finance. It survived wars, depressions, and market crashes. By the early 2000s, it was one of the most powerful investment banks on earth. To Wall Street, Lehman wasn't just a bank, it was untouchable. Inside the banks, everything looked normal. Traders came to work, screens were green, profits were rising. For years, the financial system appeared stable. Housing prices kept climbing. Millions of Americans believed they were building a better future. Banks approved loans faster than ever. Risk was repackaged, renamed, and sold as something safe. Very few stopped to ask a simple question: what happens if the market stops growing? Inside the banks, everything looked normal. Traders came to work, screens were green, profits were rising. For years, the financial system appeared stable. Housing prices kept climbing. Millions of Americans believed they were building a better future. Banks approved loans faster than ever. Risk was repackaged, renamed, and sold as something safe. Very few stopped to ask a simple question: what happens if the market stops growing? Suddenly, the cracks appeared. Mortgage defaults surged. Banks grew nervous. Investors panicked. Stocks wobbled. Lehman Brothers stumbled. And the world noticed. Calls flooded trading floors. Phones wouldn't stop ringing. Credit froze. Deals collapsed. The illusion of safety shattered. In an instant, calm vanished. Lehman Brothers collapsed. One of the oldest investment banks in America was gone. Markets plunged. Trillions of dollars vanished in days. Credit froze overnight. Banks stopped trusting each other. People rushed to ATMs. Savings disappeared. Jobs were lost. Homes were abandoned. What began on Wall Street spread across the entire world. The crisis didn't end on Wall Street. It moved into living rooms, into families, into everyday lives. Millions lost their jobs. Savings were wiped out. Homes were taken. Dreams disappeared. The numbers on the screen became real people. The crisis was no longer just on Wall Street. Governments stepped in. Billions, then trillions, were injected to save the banks. Bailouts, emergency meetings, urgent decisions. Stock markets stabilized. Temporarily. But trust was lost. People had seen what could happen, and the world would never be the same. The market seemed calm again. Screens are green. Life goes on. But the cracks, the warning signs, they were never fully gone. And the question remains, what happens next? The shockwaves didn't stop at one country. Global markets trembled. Banks in Europe and Asia felt the strain. Jobs were lost, savings vanished, businesses closed. The world was interconnected, and one collapse could ripple across continents. History had shown its lesson. But would anyone truly learn it? The system survived. Banks were rescued, markets recovered, but the rules barely changed. The risks didn't disappear, they only moved. Money became cheap. Interest rates fell to historic lows. Borrowing was easy. Too easy. Debt grew faster than before. New instruments were created. New promises were sold. Different names, different markets. But underneath, the same risks. The world seemed calm again. Confidence returned. Banks lent more. People borrowed more. New financial products appeared. Promises of easy money spread everywhere. Different names, different markets, different countries. But underneath it all, the risks were still there, growing, unseen, and history was ready to repeat itself. Warnings were everywhere. News headlines screamed of instability, yet most ignored them. The system appeared stable, but under the surface, the next crisis was already waiting.